Welcome to this week's episode of Your Stock Request for the 25th of February. Hi, I'm Michael Gable, Managing Director at Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Suncorp, Star Entertainment, 4D Medical, Amaero International and Strategic Elements. So if you have a request, please send it through. Make sure you're getting the free newsletter. If you want my best tips for the week though, you need to subscribe to the Dynamic Investor, which is the report that I send out every Tuesday. But if you do enjoy these videos, we'd love you to share them on social media or even leave us a review on Facebook or Google. The core business of Fairmont Equities is in portfolio management. So if you want my direct help with your portfolio, then please let me know. And any advice, of course, is general only. So we've got our daily chart here of Suncorp going back a year. Now, it's for the last sort of few weeks, up until a couple of weeks ago, it had been improving. We saw a bit of a rally here where it managed to just surpass that June peak, but it was quickly sold down. So we could see that's the high point there in June. So got through it, but then it sold off, which is a negative. The other negative is that it's made a lower low. So we could see from here, the rally at the start of November, it's been making higher highs, higher lows, but now we've got our first, after making a higher high, it's now made a lower low. So that's a negative. And basically, the risk now is to the downside, unless it can somehow quickly get above here very quickly and prove us wrong. I think that it's going to continue drifting lower for the time being. Star Entertainment, so generally been trading well since those March lows, putting in the higher lows here. We could see the consolidation, the break. So early Feb, sharp rally. It was met with some selling as soon as it got to the November high. It was met with a bit of selling intraday and then it's come back. But the good thing here is the pace of the decline has really slowed down. So, you know, that pace has subsided, and I'll just zoom in here. We could see that the range is really tightening up. So this catches my attention. This is potentially a positive. We just need to see a break. I mean, it could break to the downside, so we don't want to preempt it. But a tightening of a range here is potentially a positive. If you see an upside break and a strong move, if it can go from about here to 380 in one day, then you know you've got a rally on your hands. Okay, 4DX, so only been listed for a short period of time. Clearly price action is looking negative. It's just sliding away. But it is at an important level here, which is the October break. So we could see in October, in the space of 3 days, it went from around that sort of $1.70-ish level and briefly got close to $3. So 3 days movement got it from here up to here. And then we can see over the course of the next sort of 4 or 5 months, it's basically drifted all the way back. So the selling's needed a lot longer to get it back here than the buys to get it from here to here, which overall is you know, it's not bad. It's not a bad sign, but we just need to see that it is going to reverse at this level. So that's the main thing. Just keep an eye on it. If we see a big sort of reversal day, big high volume up day, then we know that it's finding support. And then you just place your stop underneath. But for the moment it is drifting, and then, you know, it could well drift to new lows. So don't preempt it, just wait for the big move up. Okay, 3DA, so wasn't looking too bad recently. You know, a few weeks ago we saw this, okay, did this decline here in December, but then over sort of December, January, it rounded out above this low, which was a positive, and then it really started to get going. So it looked pretty good a few weeks ago, volume coming in, you know, attempting to retest the old high, naturally you'd expect it to come back for a period of time and then get going. However, the slide is a little bit too steep for me. I mean, I would have preferred to see it above 70 cents. So it's going to congest up here, not come back as deep as this. And we could see even yesterday's price action looks a bit ordinary. So at the moment, I just think that it has been sliding too far, and it's probably going to go back and retest the bottom of the range here near 50 cents. Okay, strategic elements. So this one's provided a few, in my opinion, obvious buy signals over the last sort of few months. So long base period doing nothing, then a huge gap up on volume. That was the first buy signal. Didn't get sold down heavily, contained within the range. End of November, another sort of big move up on volume. That was another possible buy. And again, December, gap up, volume. So a few buy signals, then it's gone on this huge rally. Profit taking, of course, but the profit taking has slowed down. So you've got these big sharp movements down, and then we could see here over the last couple of weeks, much slower, much tighter range. Again, tightening of the range, coming back to this low point, and then yesterday you get this sort of classic big move to counter all of this decline in one day, volume starting to tick up again. So to me, that's another buy signal. So I think that this is a buy, and we should see another decent rally out of SOR, but you need to have a stop somewhere. So initial stops, buying it here, clearly just under here. That needs to be the low. If it goes under that, you'd be out of it, and I guess you could sort of price your position sizes accordingly depending on where you're buying it here and where your stop is. All right, well, that's all for this week. Any requests, send them through.